Tushar Mahajan of Nomura believes that markets may remain range-bound till election, though Reserve Bank of India policy will be a key trigger in the short term. He also bets on IT and four-wheeler stocks going forward.
For now, we'll have to stay stuck with this range, and we could probably see that, on the downside, the 6150 odd levels may probably narrow down to about 6240, and, the upside pretty much looks capped around 6330, 6340 odd levels. So you'll probably see another bout of range contraction before we finally move out. There's a good chance that we might just trade in a expanded range in the run-up to the elections, but my guess is that, you'll probably from March onwards, you'll start seeing trends coming out more clearly. From a trading perspective, immediately in the short term, probably RBI is the bigger trigger. IT sector is a sector which you would trade with a long bias for sure. And that's how that's how we would advise clients, and that's how we would trade ourselves as well. There seemed like a new bull market coming in for the cyclicals, and all these stocks were leading the charge on the Nifty per se. And once they gave way to pharma and IT sectors back again early this year, these sectors have absolutely had no chance to stay on to the levels that they reached. Within the space per se, obviously we like LT, given the fact that it is the industry leader, and we would see that stock performing first before the rest of the pack begins to move in. But there is some time for it to move. I think for the remainder of the month, ahead of the RBI policy, we would look at public sector banks versus selling off some private sector banks, where we would put our money on four-wheeler space versus the two-wheeler stocks, which is, long the likes of Maruti and Tata Motors versus shorting Hero Honda and Bajaj Auto.